What's going on, traders? Welcome to the channel. My name's John. That's Groot. So you're telling us there's a chance. We trade options here. All right, AMC. Oh me, oh my. Massive, massive closing day in AMC. But a really important week coming up. We got to talk about this. Monthly options expirations coming up. Triple witching's coming up. Will the short squeeze happen? We need to discuss that and look at this further. To understand that, we need to understand a gamma squeeze. So let's chat about it. And then lastly, let's also get those likes out there so that this video can go out to the community. It'll spread faster. It'll get out to retail traders. We'll be able to better understand what to expect from hedge funds, short ladder attacks, all kinds of business there. And not financial advice, but just want to get the education out there so people can understand what's going on. So as we look at the daily chart, you're seeing downtrend still somewhat persists, but key levels. The stock is right now trading at $49.50 or so. $50 level is very present as a psychological resistance level. So keep that in mind. If we break past that, then next one to watch for resistance is the 51.50. As we keep moving higher, potentially, I'm looking at the 60 and then all-time highs at the 73 to 74 level. So those are ones to look at. If we break to the upside, just look for possible resistance there. If we go lower, big support moves at 43, the $43 level, big key battleground that was fought this last week, and then also 36.72. So that looks pretty interesting, and again, we will see that. But as I break into the 5-minute chart, let's talk about a few things. So number one, I want to talk about these short ladder attacks that come in here, and then I want to talk about the delta hedging or gamma squeeze that can happen. And then also, we just need to understand what the psychology is as these things start to move. So in essence, let's talk about the gamma squeeze. I think that's really important because I personally find it as a precursor. What's a precursor? Pre-course meal. I find it as a precursor to the short squeeze that can happen. And the reason is, what happens in a gamma squeeze, this is tied to the options, the derivatives market. You have someone called a market maker. They create the market for AMC, and if they're really good market makers, they hedge their risk, and that's what creates a gamma squeeze. And to explain this, let's just say right now stock's trading near 50. Well, someone might have a 51, a 52, a 53 call at those strike prices, and if they own those options contracts, they have the right to exercise but not the obligation, and that presents a risk for market makers. So if the stock starts to move higher, let's just say, since those contracts are out of the money, but if they actually move in the money because the stock goes higher to 52, 54, 56, well, then those contracts start to become more valuable. And there's also a big chance or a risk that they might get exercised. And this is really important for the market maker to hedge their risk. Because if they don't hedge properly, if they're not doing their job well and they're really poor market makers, they won't be there for long. They'll also probably be broke at that point. And the reason being is, say the stock's at 60, someone exercises their shares at the 51 strike. Well, it means you're paying a cost basis at $51 a share for those 100 shares, but the actual stock is higher at 60. Well, someone's got to actually give you those shares, and the market maker, to take that, will really hurt them because they would pay the net difference. They would lose that difference in price from 60 to 51 if they aren't hedging properly. And how they hedge properly is, as the stock starts going higher and higher, they see the risk present and they'll actually buy 100 shares just to cover right there. So that covers their deltas or their hedge right there. And as this goes on higher and higher, they keep buying 100 shares. So the stock's moving higher, there's more buying per contract to cover risk. There's more buying, and then what happens is hedge funds will be, or shorts, anyone who owns a short position might see that and say, hey, this is bothering me, I'm losing money, I'm losing it faster than expected. They might have to cover, and then that becomes a purchase that also pushes the stock higher. So that's really the idea behind a short squeeze, a gamma squeeze. That's all you really need to know in terms of that pressure of how the price moves higher. Now let's talk about lower. Short ladder attacks really like to push the stock price lower. And you can really see this on the 5-minute chart. AMC yesterday really crazy. And what happens is you'll see these big red bars, big volume to bring them lower. And what happens is these short ladder attacks are trying to really hunt for stop losses and try and shake people out of their shares. And the way this works is, say we're trading at about 50, someone might have a trailing stop set at 45, and what'll happen is it's like, okay, let's drop this lower, boom. You get a couple bars where it's like, okay, things are cool, and then boom, another big drop right here. And then how that happens is it then starts to hunt for stop losses. Someone gets shook out of their shares, they sell. Someone gets shook out again, they sell. And then this pressure just keeps going lower. You can really see massive drops when things like that happen. And so the thing I find resilient about AMC that's interesting is we'll get these ladder attacks great, but it never continues fully. It'll drop significantly, and this is just big money pushing the pressure lower, but it does not appear to be people getting shook out of their shares, and they just trade sideways, and then eventually it's like, hey, our cost to borrow is crazy, this isn't working, or we took some difference in pricing and we got profit, let's sell out, let's close out basically, and they buy back and we move higher. And I'm really impressed. I've seen a lot of this similar action in AMC a lot. You can see here, around the 7th of June, another big attack, and then boom, it's like, okay, nope, let's cover. Another big attack, boom. It's crazy to see that. It's really impressive. So what I think is likely coming up here, really big money is probably going to try and make this move sideways all the way to expiration coming up Friday the 18th. So I want to cover and hedge my risk for that.